It is time to wake up. BlackRock is giving you the millionaire blueprint, but most people are doing it completely incorrect in the cryptocurrency and the financial space. In today's video, I'm going to break down how Larry Fink is giving you the exact blueprint on where they're taking us. Think of the word infrastructure change. This will be your financial system for the next 100 years. But everybody's trying to get rich in crypto, and they're going to get wrecked because Wall Street wins 100% of the time. You have to pay attention because what you're paying attention to, you're paying for. In today's video, I'm going to break down how Larry Fink is giving you the exact blueprint. He's telling you exactly where we're going. Write down the word infrastructure. I'm going to break it down and show you how I make my choices based on macro and microeconomics. You have to study history at a deep level to understand where we're going the next 100 years. So buckle up. We're going to dive right in. On the back end of every video, I share with you exactly what I'm doing. All right, so check this out. So we're going to watch this video from a dear friend of ours, Ray Fuentes. We're going to have him on the channel very soon. So he posted this on July 7th, 2024. Larry Fink from BlackRock discusses the U.S. debt, global capital markets, and the strength of the U.S. banking at Aspen Ideals Festival. So it's really important to listen to this. Now, the key things you need to listen to is infrastructure, digitization, and I'm going to break down where I think we're going the next 100 years. Pay attention. Get out your pen and paper, and let's write some notes.
The G7 has a debt to GDP of 124. That means they have more debt than their GDP. Historically, it used to be considered something safe around 50% of GDP.
Safe, 50% of GDP.
In 2000, our U.S. deficit was $8 trillion. So 223 years of building a deficit of $8 trillion.
Okay, so let that sink in. 223 years to get to 8 trillion. Now listen to what happened from 2020 to 2023.
In 2000, then to 2023, we added $23 trillion of deficits. We are now breaking through 100% of debt to GDP as a nation. At the same time, we are seeing a growth in the global capital markets. We're seeing the capital markets in India growing, in Saudi Arabia growing, Japan. The biggest benefit of the United States is the strength of the U.S. capital markets. So even post-financial crisis, we were the fastest economy growing out of the Great Recession. But as we elevated the capital standards in the banking system, we've been able to offset the extraction of debt capacity through the capital markets. And the strength of the United States that no other country has is the strength of our banking system and the strength of the capital markets. That's a blessing. And neither party in the United States nor most parties in Europe are talking about how are we going to grow out of this problem. The CBO has just estimated that our deficits, I think over the next 10 years, are going to go to 50 trillion. This is not funny money. This is a serious, serious problem. And if the capital markets overseas become more developed, that's going to become a better destination for.
So that's where let me let him finish this. Sorry.
Capital, right?
So he says, as they become more developed, it's going to be a better place for capital. You got all other countries. Think about this. Ripple is booming outside of America, but the SEC, Gary Gensler, is holding them back in America. Warren Buffett said it the best. He said, when the tide goes out, you see who has swim trunks on. What happened is the tide went out and America had their no trunks on, right? We've had this low interest rate. We've had money printing. We're the only country that can print money, and we got sloppy. We got caught with our pants down. So now we're backpedaling, trying to figure this out as all other countries work to innovate into blockchain technology, tokenization, distributed ledger technology. Crypto is not going anywhere, guys. But you have to understand micro and macroeconomics. And if you make the right bets, it could radically transform your family's life.
Now, the U.S. is the greatest location for capital, and that's why we're able to finance our deficits. Other G7 countries like Italy and Japan have deficits far worse than the United States. And the United States is dependent on 40% of international capital to finance our deficits. We have to have a growth agenda, and the only way I know we're going to have a growth agenda is to rebuild our economies and infrastructure. And
key, listen, rebuild our economies, infrastructure, digitization, and decarbonization. Write all three of those down.
Digitization, decarbonization, rebuilding our infrastructure so we can increase productivity.
Okay, so they're going to rebuild the infrastructure. So I want you to start thinking of blockchain, distributed ledger technology, cryptocurrency. That's the way that I think about it after reading the book Intelligent Investor. It's an infrastructure change. I'm making bets on the new infrastructure of the financial system.
And I do believe we're getting to a point where our public debt is going to start crowding out private capital, and we're going to have structurally higher interest rates.
What can the private sector do to trigger some action in that regard? I mean, you're the head of the largest asset manager in the world, Larry Fink. It's not just you, but you have some influence. At this point, we have candidates running for president who aren't even talking about this subject.
It's not even a conversation. So in my letter, I talk about the need for more public-private investments. Well, the United States is one of the last countries where we've had private capital investing in our infrastructure. And I believe if we changed our policies, privatized our airports and privatized maybe our ports, and having private capital investing that, then our public spending could be rededicated to more urgent social needs, more urgent needs.
Think about what he's saying, guys. They're not letting the private sector in because they're benefiting financially. Instead of putting the money where it needs to be in bridges and roads and schooling and all that stuff, they're putting it into where the private equity should be, where the private capital should be, making their pockets bigger.
Needs, elevating our education, elevating, our issues around Social Security and healthcare.
Listen to this.
And so I believe the need is to rethink what is the role and responsibility of the public sector for the development of better 21st century infrastructure. We know that we are going to have to digitize our entire economy. We know we're going to have to move forward on decarbonization. These require huge pools of money. Allow the private sector to be part of that. We have this enormous functional capital markets that can provide the capital.
There's going to be so much money going. So infrastructure, digitization. Well, where does that come from? We're going to break that down. BlackRock just bought acquisition of Preqin, which means for family offices, private data markets. So they're buying data. And Preqin is one of the most sophisticated data things, helping them understand where the trends are going in the capital markets. Okay, BlackRock agreed 3.2 million. Acquisition of Preqin is poised to catalyst significant shift in how private markets understand and navigate. Preqin's comprehensive data, private equity, real estate, hedge funds, and infrastructure will enable BlackRock to create indexes for private markets akin to those of the public markets. Pay attention to what BlackRock is doing. That's why I started going heavily into Bitcoin when BlackRock went into a Bitcoin ETF, guys. They're giving you the signal. He said it was a flight to quality. That is going to be part of the infrastructure. Ripple will be part of the infrastructure, okay? This move underscores a broader trend. Data is becoming the cornerstone of investment strategies for families, offices, investments, and alternative assets. Write that down. Having access to detailed, reliable data is invaluable. That's how I make my investments. Data. I go back in history and I look at patterns and waves of energy. Remember JP Morgan, billionaires use astrology, millionaires use charts. If you're looking at the charts every day and you're focused on the ups and downs and your favorite influencers having you jump from crypto to crypto to get rich quick, you're going to get wrecked. You will not get wealthy. Wealth strategies are long-term, fundamental game plans. The person who's in the market the longest and has a strategy to exit properly and reallocate resources will become the wealthiest in the future. So I want to give you an example of alternative investments. So this is on Franklin Templeton's website. It says Alternative by Franklin Templeton. They have 40 plus years in alternative investing. I just want to give you some examples to kind of open up the mind and awareness. So private equity, we're in private equity, Ripple pre-IPO, SpaceX pre-IPO. We went through there through Link 2. So we own quite a bit of Ripple pre-IPO. That would be an example of private equity. Private credit is a huge thing. Private and public sector. A lot of people just think of banks. There's a lot of private debt out there. There's a lot of money that wants to lend their money. Private credit. Digital assets. That's part of the infrastructure change in alternative investments. That's what I wanted you guys to see. Venture capital, real estate, which we're heading into, and we're looking at the future of real estate, apartment complexes, multifamily, and then hedge strategies. So those are examples right on Franklin Templeton's website of alternative investments in infrastructure, okay? I want to give you another kind of a way to look at it. So crypto, this came out in 2023. Crypto versus banks, it's not either or for Chainlink and Ripple, okay? Chainlink and Ripple, along with the firms Fireblock, R3, which is Wells Fargo, Ripple's with Bank of America. We have JP Morgan, Onyx, and Zodiac majority of markets are collaborating with financial institutions, public and private sector coming together to develop infrastructure in digital finance. Okay. So when Larry Fink talks about infrastructure, you have to think of everything. You think of bridges, we think of the digitization, we think of the old industrial era in banking. We're going from industrial to technical. We're going from an old archaic analog banking system to a blockchain technology, distributed ledger technology. So that's how I make my investments. Now, I'll be completely honest with you guys. When I got into crypto in 2020, I was trying to get rich quick. I was chasing all these pumps and dumps. Influencers tell me to go here, go there, and I was getting wrecked. Finally, I sought wise counsel. I sought multimillionaires, and people were heading into that realm of generational wealth. So they taught me diversification, horizontal strategy. Stop going to school, getting a job, having a 401k, and hoping that you can retire, that the market's favorable. Stop having a job and just having cryptocurrency and hoping that's going to be your retirement. It's not going to work. You have to understand how money works. Money is currency. It needs to move through the system. So what I did was I took this very speculative asset, cryptocurrency. It was extremely speculative from 2020, 2022. It's starting to get somewhat normalized. We're still very speculative. We're in speculative phase. I took profits. So let's pretend 50% doesn't exist. That's staying there forever. I took 50% of my portfolio, and from 2020 to 2022, I pulled it from all the way at the top of the risk pyramid. It is the highest risk, but the highest return. Highest risk, highest return. It went down 85% in 2022. I pulled before it went down 85% as everybody was rushing in trying to get rich quick. I pulled down the risk pyramid. I used things like, at the bottom of the risk pyramid, you have insurance-based products, you have bonds. After seeing what the what financial advisor for Biden understands about bonds, I'm not playing with bonds, right? But they're considered safe investments, right? So I use insurance to protect my principal, to compound my money every 7 years at 10%, okay? And also to be able to borrow against the money tax-free. Think about that. I'm pulling house money, putting into a very speculative, large amount of profits. I'm pulling the house money and I'm insuring my house money. So then I can use it to richest man in Babylon it. If I choose to, I can borrow against the cash value if it's properly funded, properly structured, and I can buy more assets, okay? From here, we're going into real estate. Throughout the last 4 years, I've developed businesses in information technology and attention. I scaled the businesses into systems and processes. I take the cash flow and I reallocate it back into the capital markets, okay? For me and my family, what we focus on, wants and needs. If we want something, we can't buy it till an asset can pay for it. We focus on our needs. My next phase for me is to get all my net, all my bills, all my living expenses and non-negotiables paid for by assets. Not the income I get from my business, but paid for by assets. Once that is done, then I'll start buying things I want with assets. That's how I'm going to build generational wealth for my family. It takes discipline. It takes consistency. So no matter how crazy the bull market goes, I got to make sure that my net is taken care of by the assets so I don't have to rely on the business fluctuations. It's always taken care of. On top of that, I put what's called the Rockefeller Trust on top of it, a waterfall system. 50% goes to my children, 50% goes into a dynasty trust that will go from generation to generation, where I set the rules and parameters. So I hope that information helps. How do I exit the strategy? So I'm the co-founder and creator of Merlin right here. It's the smartest way to track your crypto. You see on the right side here, that's how I set up my exit plans, right? You set up your exit targets. We send you an alert when you get close. It is not an investment platform. We do not invest people's money. Okay. That is not us reaching out to you proactively around your crypto portfolio. Those are fake accounts. We do not invest people's money. It's very important. Okay. This is a tracker. It's an interface. We do not hold your keys or combos. So it is an exit strategy app. You can also see where it says your estimated taxes. Okay. So we can help you with these types of things with exit strategies. Also, if you're interested, hundreds of people message me a day around how do I insure my wealth. We have a needs assessment. If you fill out the needs assessment, the proper team member will reach out to you. Okay. So fill out the needs assessment. You'll see all the things within 24 hours, a proper team member reach out to you. So I appreciate you guys. That's in the description of this video or my social media platform. Just click the link and I'll see you on the inside. I love you guys. Warriors, rise. Remember, Christ is King.